You're listening to the Weekly Wrap-Up on Sprott Money News.
Well, greetings again from Sprott Money News and SprottMoney.com. It's Friday, June the 14th. This is your Weekly Wrap-Up. I'm your host, Craig Hemke, and joining us is number one Toronto Raptors fan, Eric Sprott. Eric, good morning.
Hey, Craig, good morning. We had a long night last night, but a very wonderful night. And talk about overnight, oh my God, maybe even better than the Raptors win is what the price of gold's doing today. So it's all very exciting here in Toronto.
You're hitting the daily double up there. That's better than going out to Woodbine and hitting the daily double. You got the Raptors winning, and you've got gold very close to a breakout. You're right. It's an exciting morning. And just before we get started, we'll have a regular format again this week where we'll just get back to talking about the metals. But we do want to thank everybody for participating last week in our Q&A weekly wrap-up. We'll do that again soon, promise. But for now, we're going to get back to a regular program. Good time to do it too, Eric. Man, as you said, we are up strong again in gold today, getting all the way up to 1358 as we record here at about 7 o'clock Eastern. What are your thoughts as we go through the day?
Well, it's interesting. I go back to the commentary that we had 2 weeks ago when I was pointing out that a gentleman named Christopher Mullen had been predicting that, man, gold's going to go up to 1450 in 5 to 7 weeks. We've now had 2 of those weeks, okay? And we've now almost got up $100, for goodness sake. We've certainly gone up 85 in 2 weeks. So I'm thinking his prediction, based on whatever work he's done, okay, was very credible. And then we have this week Paul Tudor Jones coming in, being interviewed on Bloomberg, and one of the world's most successful investors, saying that his best trade in the next 2 years is being long gold because it's going to go to 1750, and when the Fed starts to cut interest rates, gold will scream, in his words. And the impact of that happening is so stunning for the gold stocks. It's so stunning. We are looking at hundreds of percents of gains here. Hundreds. Don't miss it. This is a lifetime opportunity here to make a truly, truly outsized gain. And for very logical reasons, like a 1750, imagine 1750. When the average guy's making $500 an ounce of profit, oh my God. I mean, I just bought into a company this week that if they had a $500 profit or $100,000, it would make $50 million US. The market cap was 25 Canadian.
Wow.
25.
Yeah.
Well, what's that thing going to do?
Yeah.
Going forward here. So I would say everyone should be looking real hard at what they can invest in. And it's going to be companies with big production, with low market caps, that are kind of marginal, profitable companies today, marginal. And all of a sudden the price goes up, and wow, you start banking it. So the investors got to do a lot of work here, don't know where to go, and get positioned here if this should transpire as we expect. And, of course, the reason for it to transpire, it's the same thing that Paul Tudor Jones talking about. It's the effective lower bound. How low can rates go? I mean, if Fed funds go down by 100% to 150, how does a bank make a 2% spread when Fed funds are 150? Mm-hmm. Well, they got to charge you negative interest. Well, you know what? Maybe you won't like that. Maybe you won't want to pay the bank 0.5% every year, and you'll go buy some gold or silver or whatever, something else.
Exactly.
And that's what can drive things right there.
Exactly. You and I have long discussed negative interest rates are the greatest fundamental man has ever created for owning physical gold. Because the argument is always, well, it doesn't pay a dividend and you've got storage costs and all that kind of stuff. Well, when the bank pays a negative 2% dividend, gold doesn't look half bad, does it?
It looks spectacular. And, to imagine that it could go well beyond the numbers we just talked about, okay? That's the thing. Once one of these things gets under a drive here, what's to stop it at 1750? What's the magic of 1750?
Right.
Gold got to 1900 back in 2011. We've had the most incredibly loose monetary policy since 2011, and I think they basically put a lid on gold intentionally because the policy was so ridiculous. and I suspect we're going to break out of it here, and I think we have a very good chance of going to new highs. And don't even wonder what companies would make at $1,900 gold.
Right.
I mean, my goodness, are you kidding me? You could be talking 500% moves in the stock. So get in the game here.
I want to back up to that too, Eric. You mentioned this to me 2 weeks ago, and I'd never thought of it this way before. And it's such a fabulous, but basic point. And so I'd ask you to remake that point for everybody listening this morning in case they missed 2 weeks ago. You had mentioned that in an early part of a bull market and a move, the best place you can be are in those large producers, like you said, like you just described. And I want you to explain again why, but also I want the listener to notice that that's really what's been cooking here. The Hui index or the GDX, last Friday they got beaten back, and now they're well higher than they were even at their highs last Friday. So explain to folks why those large companies can really show some serious strength early on in a move.
Sure. Well, a high-cost producer, probably all in, their costs are $1,200 and he's making $100 an ounce at $1,300. Well, you go to $1,700, he's making $400 an ounce. His earnings have quadrupled. Yeah. Quadrupled. What's his stock price going to do when the earnings quadruple? I mean, you're talking hundreds of percents here.
Right.
In a short time. It's the time thing. This is supposed to happen quickly. So the returns are phenomenal. They're all exponential.
Yeah.
And that I'm just using $1,700. What if it goes to $2,000 and the guy's making a profit of $700 an ounce up from $100?
Or Eric, even if you're making $1 at $12.50, you're making $2 at $13.50. And if you're an institutional money manager, hedge fund manager, and you're already reading stuff from Paul Tudor Jones, and you're looking at stocks or a sector where the earnings are going to double, I mean, that starts to make pretty good sense.
It does indeed. That's what the beauty of gold stocks is. In 16, I think we went up 160% in like 6 months. And the move from 2000 to 2011 was 1,700% increase in the average stock. The average. Obviously, many went up multiple thousands of percents. So this is what you're staring at, okay? This kind of risk-reward, where what's your risk here? They're so beaten up. These stocks are so beaten up that your risk maybe is 20% downside, and you got 200% upside.
Right.
Well, that's a good risk-reward ratio to tack on here. So it all looks quite exciting. We've had good physical data. The Chinese are bought almost 16 tons this last month. They keep stepping it up. They started at 10 or 9, I think, and then they went to 10, 11, now 16.
Yep.
Does anybody want to take a guess at how much gold the Chinese could buy? Maybe they don't like the U.S. dollar. Maybe they got a big trade surplus. Maybe they can buy up all the gold here as a sort of a trade war kind of antidote.
Let me ask you, Eric. It's very interesting position we're in this Friday morning, especially after the sell-off reversal last Friday after the employment report, and then the predictable sell-off that was coming Monday after the Mexican tariff news. But now we completely reversed. We're above last week's highs. I know I'm looking at 1360 today because we haven't had a weekly close north of 1360 since March of 2013. So it's more than 6 years. Even if that doesn't happen today, are you still excited about, the potential for that happening, obviously, and what else will you be watching?
Sure. Well, I do believe in the fact that there's a new game in gold here. When you look at what the Fed's doing, when you look at what was discussed at the Chicago Fed meeting, the effective lower bound, what are we going to do about the effective lower bound, i.e. zero interest rates? Do we have a policy? How do we deal with this? Do we go and buy equities? Do we buy bonds? What do we do here? Because, we gotta make sure the market doesn't go down. And of course their monetary looseness is going to take everybody towards gold, particularly if you're not American, because you're sitting there watching what's going on, okay? And whether you're Russian or Chinese or Turkish or Iranian or whatever. You're looking at gold as an antidote to monetary looseness in the United States as the reserve currency. So and of course, in a lot of currencies, gold is at a record high.
Right.
It might be at a record high in Canadian dollars, in Australian dollars, in Brazilian real. I mean, there's a lot. People have done well in those countries owning gold versus their junky currencies. So people aren't stupid. They catch on after a while. Now, it hasn't happened for a U.S. viewer, but I think it's about to happen. So you better make sure you're getting on board.
Eric, before we wrap up this week, though, I'd be remiss if we didn't talk about silver. A lot of folks noticing. Yeah. I mean, what are we now? Greater than 90-1 on the gold-silver ratio, which is probably that's probably a topic for another day about what's going on there. But nonetheless, silver got up slightly above its 200-day moving average, which is to be a kind of a critical high-frequency trading or spec fund indicator. Last Friday, then reversed, went all the way back down to 1463 on Tuesday, and now we're back up to 1504. We know about the COT report, all of the specs that are short. What's it going to take for silver to finally kind of start playing some catch-up here?
Yeah, well, there's been some stunning data out of India. The amount of silver imported into that country has gone crazy. In fact, Steve St. Angelo, who follows silver very closely, wrote a report saying that the exports from the United States to India have gone from 2 tons to 580 tons, which is almost impossible to believe. How do you do that, right?
Right.
How do you all of a sudden supply 580 tons to a country that you were supplying 2 tons to? So there's lots of compelling data in silver in terms of the physical demand. And there was even commentary that a lot of people are now buying silver jewelry in lieu of gold jewelry. That might be because of the price factor, I suppose. Mm-hmm. But from a silver perspective, that's wonderful news. So I think silver, when it goes here, it will outperform gold. I have just no doubt about it. So yeah, I haven't really focused much on silver stocks because silver stocks are hard to buy because there aren't many, unfortunately. But silver, I think silver looks great here.
You mentioned, we talk about the COT report and all that kind of stuff and JP Morgan's big position on the COMEX and everything else. But that, it's the same substitution effect that we talk about, that even the government statisticians talk about, that instead of buying steak, you'll buy hamburger at some point. If gold does go to 1,700, 1,800, 1,900, silver has to play catch up just simply from that substitution effect, doesn't it? People looking to buy something less expensive.
It would take so little money. I mean, we talk about maybe there's 1 billion ounces of silver. That's $15 billion. Small $15 billion is in the world of things these days. What if the Chinese decided they wanted to buy some silver along with their gold? It would just, like last month they spent, I think they spent $500 million on gold. Well, what if they started spending that on silver? In fact, there was some commentary that silver demand in China was quite strong. There was no official data, but there was that indication. There was an indication that the premiums on silver in India doubled this week versus last week. And the funny thing about that is, we keep hearing, well, the Indians never buy unless the price is going down, which I think is baloney. Because I think the Indians, like everyone else, well, first of all, they're thinkers, okay? And the fact that the silver premiums doubled this last week is an indication of just how smart they are in terms of, you got to buy because we're not buying this for what's going to happen in a week or two here. We're buying it for what could happen in the next 2 and 3 years, and that could be one huge outsized return in silver and in gold for that matter.
Yeah. Lastly, as we wrap up, Eric, there's a lot of U.S. economic data. Later this morning, we'll have the retail sales report, which will probably be out by the time folks listen to this. We'll see how that goes. But also then we have the Federal Reserve Open Market Committee meeting next week, Tuesday, wrapping up Wednesday with another Powell press conference. Just any lingering thoughts you have for listeners, things to watch out for, and then we'll see how it goes by the time we talk next Friday?
Well, it's kind of shocking how it would appear to me, and many others, by the way, that the Fed is really watching the stock market, okay? It's not inflation and economic growth. It's the stock market and the bursting of the bubble, which, of course, they've created this incredible bubble that we are all quite familiar with. And so, if the market, for example, was weak into the Wednesday meeting, hey, maybe they cut next week. If it just stays right here, they probably don't cut, but I'm sure a cut's coming. We see so much economic data that's really punky, particularly in the physicalness, whether it's the freight indexes or rail shipments or things like the real economy. It's slowing down significantly, and the Fed, I think, thinks their mandate is to keep the stock market up. So if the stock market starts following the economic data, which is weak, then we're going to get rate cuts way sooner than people might have imagined.
Yeah. All right, my friend, I think it's probably time to wrap this up, but I do want to remind everybody, obviously, it's going to be a very interesting back half of this year and 2020. No better time to either begin a portfolio of physical precious metal or add to your portfolio. And you can actually do that with your registered investments too, your RRSP account in Canada, your IRA accounts in the U.S. You can diversify those with physical gold and silver from Sprott Money. Just go to sprottmoney.com to check that out. Or, of course, as always, give us a call at 888-861-0775. Eric, have a great, fun weekend. Try to stay out of trouble with the big victory parade that you know is coming. And then we'll look forward to getting back together next Friday.
Well, I hope we have a week next week like we have this week, because it's all kind of coming together here. So it's been fun times again. So I look forward to next week.
Let's do it. And from all of us here at Sprott Money News and SprottMoney.com, thanks for listening and have a great weekend.